Hello everybody. What exciting quarter. It has been a massive about turn from the central banks in the first part of 2023. And yes, if we started the year, we said, look, we're going to have a very hawkish Fed, and global central banks across the world is just going to keep on hiking, much like 2022. And then what happened? We started to see the first bank failures, first in the US and then in Switzerland. What has happened is all these central banks have taken the foot off the brake. We suddenly see that, where it was once priced at the latter part of 2022 that the Fed would hike rates all the way up to 6%. Well, now we probably have been repricing where the Fed will probably stop the rate hiking cycle probably around 5.25. We see a European central bank that's suddenly probably going to hike rates, but at a much slower pace. So a big turnaround when there is a liquidity crisis in the banking system. And it is big. If you think that through this whole period, the Fed has printed $500 billion to bail out this US banking system. Can you believe it? Big turnaround in a very short space of time. Coming home, we've seen the opposite. A very hawkish central bank come out. The SARB hiking by 50 basis points at the March meeting. Does it make sense when they've really taken the growth number to basically around zero? We must probably say to ourselves, look, the SARB is still in that hiking and hawkish mode, but we're probably getting towards the end of the rate hiking cycle. And here around 7.75, 8%, that is probably the top of the cycle. Notwithstanding that, through this whole repricing, we've seen nominal bonds perform very well. Think about it. Beginning of the year, US 2-year treasuries at 5%, 10-year treasuries 4.5%. Now, probably closer to 4% on 2 years, 3.5% on 10 years, a big turnaround. In South Africa, we probably started the year that 10 years probably around 11%. Now we're probably trading around 10.5%. Big turnaround in bonds. And that's why we've seen in the return numbers about a 3.5% return from nominal bonds in this first quarter. But is bonds expensive? Not yet. We still think there's good value in South African bonds. The one asset class that's really been interesting is actually cash. We're finding very, very good opportunities in cash at the moment. If you think that the SARB now says inflation is going to be 6% this year, we are buying 1-year NCDs at 9%. It's not often in fixed income markets that you find real rates of 3% in cash. You know me, I went from cash is trash to cash is king. Well, cash is becoming the royal family. If you're worried about markets, what could happen to global recession? Well, sitting in cash is not the worst trade. At inflation +3, we haven't seen it. Credit, tough one. Domestic credit, not that great at the moment. Offshore credit, very interesting because these US credit markets are repricing. We're finding good opportunities in offshore spread markets. Inflation bonds, good real rates in that market, around 4.5% real yields in 10-year inflation bonds. So if you're worried about inflation and sticky food prices, well, that could be the asset class to go to. And then, as we said, our preferred asset class still remains nominal bonds. Your 10-year bond sitting at 10.5%, the very long end sitting probably around nearly 12%. Very good real yields in South Africa, pricing for a lot of negative news. So yes, in your portfolio, we still think there is a place for fixed income, especially on the cash side and on the nominal bond side. So yes, when you've got that extra spare cash sitting in your portfolio, in your bank account, really take it out of the bank account at 3%, put it in cash funds that's yielding well above 8% at this time. If you've got a longer horizon, allocate it towards the nominal bond space. We still think there's good opportunities in South Africa. And remember, plant a tree today to sit in the shade tomorrow. And that's typically of investment in South Africa. Yes, the clouds are very dark at the moment, but remember, it's in bad times, dark clouds, that you make the best investment decisions for the future. Good luck out there.